Hey, how we doing? Welcome to episode 3 of the Weekly Open, sponsored by Prime XBT. Who are Prime XBT? Excellent platform that I trade on. You can trade crypto, stocks, commodities, forex, all using your Bitcoin or USDT or Ethereum, whatever it is you own as your collateral. You can deposit it and trade a range of different instruments. Things I love about it: no KYC, excellent user interface, high withdrawal limits, much higher than other exchanges for non-KYC, which allows you to not leave everything on the exchange, reducing that counterparty risk. Um, and the most important feature, which is something I'm going to be using later on this month, is the copy trading feature. So they have co-vesting built into the platform, and it allows you to sign up and copy a trader of your choice, as long as the trader is obviously signed up to the co-vesting feature on the website, okay, on the dashboard. So I'll be going live with that sometime in August. All you'll need to do is use my link below in the bio to sign up. Um, what you'll get with that is 10% off trading fees plus $700 to check out the platform and use it, no, without any deposit. Um, and what you'll need to do is use code Tyler Durden, okay? Um, so let's get stuck in. Bitcoin, what's been going on? So there was meant to be a stream yesterday, and I didn't, I didn't upload it to YouTube, or I didn't make it public on YouTube because there was a technical issue. And once I'd uploaded it to YouTube, which takes a little bit of time, um, because it's 4K, it had no sound. So there was no sound, and I thought, oh, it was like getting late at night, and I thought, you know what? It's the first day of the month yesterday. It was the first day of the new week, so might be better to let the market play out and come back to it today. And being a day late might have been better for us in terms of what we want to see in the market, or what our plans would entail for the rest of the week. So I apologise for those that waited for it yesterday. Um, and but we generally will be back on Monday. Okay, so XBT monthly chart. So we have the monthly open. I'm gonna bring that in now. Where's the open? There. Okay. Well, actually, we're gonna mark that as the weekly open because it is, right. That's where it was yesterday's open, right? So weekly open there. Now, the other thing I want to mark out on this monthly chart is um, similar concept to when we use previous weekly high and low, but we're going to use previous monthly high and low. So we mark out July's high, July's low, and it gives us that nice mid-range in there, okay? So what we can do is use that as targets. Generally speaking, let's drop this to the weekly. Generally speaking, currently, the July's low is not of interest for us unless we start trading below the mid-range, okay? Let me drop this to the daily and give you a better idea. So currently, okay, we have nice areas of interest. July high, liquidity, okay? And we'll talk a bit more about this in a moment. And then we have mid-range would be a target, okay? Trading below that and it'll close below, then we are within these bounds, and then we can look at this as an area of interest or an area of liquidity that might get taken out. But currently, we're in the top half of this range, which means target if it turns bullish, target to the upside. Okay, and that's just on a macro level. If you're a positional trader, not really day to day, week to week, but useful to isolate price into an area and know where you are. Okay, now daily. So we have Monday's range. So let's bring that in. So let's bring our levels in and then have a look at the market. I like to begin the month with a clean chart. Always, I think it's real good practice. Just like your house, you wouldn't leave it messy, would you? It gets messy over the course of the week and you tidy it up. My charts get messy over the course of the month, I tidy them up. Same thing. But that's a personal thing. I also have a little bit of OCD, so that that ties in nicely and makes me feel a lot better. Monday low, Monday high. Monday high, weekly open. What else do we have on here that I like? SR. Okay, so the next most important levels are going to be SRs. Now, this is interesting because I was going to mark this level out, and I did have that level marked previously. We were trading off that level earlier in the month, weren't we? And we have, there's no candle closes, resistance, candle closes, resistance, close, retest, bounce, close below, failure pattern, breakout higher, takes out the highs. Anyway, clean level, but I don't really need to mark that in. Why? Because we have great confluence of the mid-range of July's high and low. So we can just we know that is SR or a target and it's right on top of that level. We don't need to have too many levels in the same place. Um, so that we have there an SR, and then what else do we have? Swing fails. Okay, so you remember down. Well, let's focus on price recency. So we have this high, it got taken out. Okay. Now I've been quite bearish up this up at the top here because the way the market moved it over the last sort of week was a little bit skeptical that it was um, real strength. I thought there was an assumption or a sentiment whereby um, the government was going to declare a recession, and they did. But I think traders traded into that heavily short, thinking it was going to collapse the market, and it spun back on them. And I think it's possible that that is what we've seen in Bitcoin. And now the net news is starting to settle in. It seems that price is reverting to the mean. But we'll go over this a bit more in a moment. Now, this swing fail here is really interesting. It's very similar to the one on the low here. Okay. I mean, they're all very similar, aren't they? Really. I mean, it's just a candle close, sweeps a high, closes below. But I like this one a lot because quite often what you want to see, okay, on a low, what you want to see if the daily candle takes out the low, you want to see it close above, right? Above the previous day's low. It's much better if it closes bullish at the bottom. For example, this is closed green, right? This is closed green. This one is closed red. I mean, regardless of it being a swing fail, it's actually a bearish candle close, similar to this one. Bearish candle close, trades away. Bearish candle close, trades away. Now, there's a couple of things that I find a bit worrying about this price action because you can see here, okay, market trades lower, bounce, trades lower, bounce, trades lower, bounce, trades lower. What do you think? What do you think everybody's thinking? I mean, it doesn't really matter too much, but you're trying to imagine where traders are going to position themselves, so you can possibly build an idea of where money might get trapped, okay, or where traders might get trapped. And I think the common belief in the market at the moment is, well, the same's going to happen again. And I think this area is going to be heavily banked on to somewhere in here. I'll say probably a little bit lower. I think you're going to get basically anywhere above this lower high. Okay, so let me just get rid of them lines a minute and clean this up and explain what I mean. And of course, this is just my opinion, right? I've used this theory in other areas of the markets, and sometimes things are too obvious and they don't play out. And I've obviously been on the side of the obvious. Well, yeah, it's definitely going to bounce again, definitely going to create a higher low or a low high. We've had this series of high lows, okay? I think there's the assumption that the next one's going to hold too. And I think this will be bought heavily in here. Now, will it be bought heavily enough to send us up? Which would be what? How many times have we done that exact same pattern? I mean, one of them's got to fail, right? Surely. Now, This is, of course, just my speculation or my speculative theory of what may or may not happen this week or early in August. Now, I like my cat is just sat on my keyboard. I apologize. Can you move, please? Thank you very much. Okay. So, with all that said, let's take a look at the hourly. Now, this looks to me like a power curve pattern, okay, and it's called a common gap. So the market marks there's a period of accumulation, then there's a markup, and then there's a revert to the mean. And the revert to the mean, I tell you what, I'm gonna just try and find it on my screen next to me, just to give you a better idea. Common gap trading. Let's see if we've got one. Common gap definition. Um, I should have thought of it before, but I didn't. Okay, so I haven't. Can't find one. I'll post one on my Twitter. Okay, that's what I'll do. So all it is a market, it breaks higher, distributes, retraces. Okay, reverts back to the mean. And for me, if you're looking at this area of price over here where it had the accumulation before the markup, you would say that that was takes out the lows, breaks the string. Yeah, maybe here. There's the high that created the low. Broke that structure. Broke the structure there. Breakout. Now I think, look at the top of this breakout. Here, I think that is target. Okay. I think if we were to fall, now it could just grind down. I mean, I think some people have labeled it the Saka pattern. Saka. Um, it's just a common gap, okay? But he posts it a lot. I'm not sure if he actively trades it, but excellent trader, really, really good guy. Been around with us since 2017, I think. But he's posted it a lot, so maybe you've seen it before. And it tends to just sort of bleed down into the origin of the move. And the origin of this move here is here. So I think that could happen. I don't know whether it's going to come down fast or what, but I like 21.3. Now, how am I going to get involved in this market? And you look at the way it's bleeding down. So we took out the high there, okay? Stops have been ran there. Stops have been ran there. Stops have been ran there. Breaks in structures to the downside each time, okay? Now, do you remember last week when we looked at the market and we said, you know what, if this is traded lower, um, I tell you what, there's a common gap, kind of a common gap there. It's a little bit different. It's actually just a smaller version. So you see there, like that fractal of price, pushes up, distributes, bleeds back down into the origin of the move. I think it's very similar on a bigger scale. This one, okay, this one, and this one. Now, this is all good and well, but how are we going to make some money, right? That's what you're thinking, aren't you, Tyler? Come on, look, we want to make some money. We don't want to hear you run on about these markets all day. Now, last week we had a look at the Monday low. Okay, so last week the Monday low came in over here somewhere. I think it was there. So previous Monday low is over here. And what we wanted to see was the market. We've seen before how it dips below and um, dips below, gets back above, gets everybody excited, stops come in there, and the market shoots higher. It actually did do that. Okay, so it actually did do it. I actually thought it was going to break higher and then break lower, which again plays into the theory of 1, 2, 3, 4, 5, 6, 7. Sorry, 1, 2, 3, 4, 5, 6, and you thought that I thought it might continue lower. It didn't. Okay, so the obvious trade was the one that we had slammed straight in our face, right? I feel like that's similar to the daily chart, where it looks too obvious now. Everybody can see it. It's a it's a 5-year-old could come on this chart and you could say, where do you think this is going to go next? And he'd probably say, well, look what he's done previously. It's going to do the same again. Um, so for me, it's about lower prices. Now, let's come back to this because I want an actionable setup for you, both sides of the market. Now, we've taken out Monday's low. What we have over here, okay, we have these equal lows over here. Okay, there. And we know there's liquidity there. Why? Well, this here, this low is a daily low. Okay, so that's a daily candle low. Liquidity there. There's a low. Market broke out, pull back. There's a low. The next, well, I mean, even the hourly, but this is the M30. Next M30 candle low is here and then here, which is a full retrace back into the origin of the move, which is what we wanted anyway. Now, I think we're going to hit these lows. Okay, we haven't quite hit them yet, so I think we're going to hit them, and then what happens then will depend on what I do next. So I need to see them lows taken because it's very, very possible we could hit them. The market could expect us to continue trending down, and it could break back inside. There's the high, it creates the low, and you see us back in the Monday range. We trade into Monday high. Okay, and then if it breaks that, we trade daily high, daily high. Okay, July high. Now, if it doesn't react and break structure, then I think it might even hit it on stream. But if it drops in and you see it sort of pull back and then it gets a little bit bearish in here, then we're going to have our stop loss in and we're going to sell that, fill that gap. Okay, there was the inefficient move to the upside. I may do a lesson on liquidity gaps, but Paracurve has already done one that is excellent. I think I need to do that again. But maybe if you want to see me explain it, maybe if that's a request, maybe I'll do that for you. Um, and that's the trade I'm looking for. I'm looking for the short back into 21.3, 21.4. If it reacts at these lows, we want to see it break structure and create a nice spike. Then we'll change bias. We trade into Monday high, and that's it. Okay, target one. We can't assume it's going to go higher than that. It may well. We may well get our short from higher. Okay, but looking for lower prices in August. Hope you enjoyed the stream. Goodbye.